Diversity has given the JSE a boost. The board says its various business segments, along with diversified asset classes across the business, supported revenue growth of over 6%. Headline earnings per share, meanwhile, increased by 12%. This strong performance has enabled the board to declare a dividend of 784 cents per share for the full year, which is 2% higher than the prior period. Sun International has posted a surge in annual profit. Headline earnings per share came in 88% higher. The firm cited a solid showing by Sunbet, saying it's ahead of its aggressive growth targets. It's also pointed to Sun City, which achieved record profitability during the period. Sun International has declared a final gross cash dividend of 203 cents, bringing total dividends for the year to 351 cents. That's nearly 7% higher than the prior period. Thungela plans to buy back up to 500 million rand of its own shares. The coal producer says the move reflects confidence in the group's strong financial position and future prospects. That news accompanied the release of Thungela's annual results, which its CEO has labelled resilient against the backdrop of rail underperformance and coal price headwinds. Headline earnings per share declined by over 73%. Thungela has declared a total payout of 20 rand. Stadio student base has grown. The private higher education group says it's seen a 10% increase on that end, which helped it deliver a solid set of annual results despite a challenging economic environment. Revenue for the period rose by 16%, while headline earnings per share came in 23% higher. Stadio has also cited good cost controls. The firm's rewarded shareholders with a dividend of 10 cents, which is 12% higher than its previous payout. Insurance, meanwhile, says it's delivered a strong operational performance. Headline earnings per share for its half-year slipped 0.8%, but on a normalized basis, that's up 0.5%. The insurer says the normalized metric appropriately reflects the economic operating performance of the group and its operating units. It cited strong premium growth stimulated by good organic growth and the high inflationary environment. Insurance has added that it's looking forward to a successful market entry in Ireland over the next quarter. Sasfin flagged a slump in half-year profit. The financial services firm says its headline earnings per share could register a decline of up to 64%. That's due to increased credit impairments and fair value write-downs of certain private equity exposures. Despite that drop, Sasfin says the core businesses performed well and that the group has seen a strengthened balance sheet. The firm said to open its books next week. Further afield, Apple and Google are in talks to upgrade the iPhone. The two tech giants are planning to build Google's AI engine Gemini into the mobile device. There's more in this package report.
Apple's iPhone could be getting a Google AI upgrade. Bloomberg reported on Monday the two tech giants are in talks to build Google's artificial intelligence engine Gemini into the iPhone. Citing people familiar with the situation, the report said Apple's upcoming iPhone software update is set to include new capabilities based on its own AI models, but that the company is seeking a partner to power generative AI features, including functions for creating images and writing essays based on simple prompts. The two parties are still discussing terms of the partnership, and Bloomberg added it was unlikely that any deal would be announced until Apple's annual Worldwide Developers Conference in June. The world's biggest phone maker has also held discussions with Microsoft-backed OpenAI and considered using its model, according to the report. Apple, Google, and OpenAI did not immediately respond to a Reuters request for comment outside business hours. Apple has been slower in rolling out generative AI than rivals Microsoft and Google, which are already weaving them into products. Last month, Apple CEO Tim Cook said the company will disclose more about its future plans for generative AI later this year, adding that the company is investing, quote, significantly in the area.
And over in China, weakness in the property sector continues to weigh on the country's economic outlook. That's even as China's factory output and retail sales beat expectations in the January-February period. Let's listen to this report for more of the detail.
Chinese officials announced upbeat numbers on the economy, though the sagging property sector remains a drag on data, as well as wider confidence about the country's recovery. The National Bureau of Statistics said that factory output and retail sales did better than expected in January to February. It's a solid start for 2024 and offers some relief to policymakers. At a news conference, the Bureau's spokesperson said macroeconomic policies have helped China recover, but warned of challenges ahead amid external uncertainties. The data released show industrial output rose 7% in the first 2 months of the year. That's above the 5% increase forecast in a Reuters poll of analysts. It's also the quickest growth in almost 2 years. Retail sales rose 5.5%. That's slower than December figures, but still beat expectations. Property slid 9% from the same period this time last year. It's not nearly as bad as the 24% plunge in December, but is still far from levels of stability.